Look at stocks trying to make their move here. Bitcoin, too, now up almost 2%. It's looking like we might be picking our direction for the morning with stocks now back towards the highs and a nice rip there. Bonds letting up as well. We've got yields inching upward, confirming a solid message here. I got Tom White looking at some earnings with me and some trades. Chris Wong joining us from Runnymede Capital, Management Research Director. Chris, let's talk some Costco here as we're looking for signs of strength in our economy. Even though the stock is down, it seems like their business is pretty strong still.
Yeah, I totally agree 100%. Costco is really the creme de la creme of the retail space and consumer staple space. Delivered a great quarter. Even though they did miss on the bottom line, net sales grew at 9.1%, which was an acceleration from 7.5%. Traffic even accelerated to 5.7%. And e-commerce was a standout, accelerating to 22% growth from 13% the prior quarter. Non-food categories were up double digits. They saw the most growth, partly because there were some big ticket items during the holiday season, like 100-inch TVs, pinball machines, and gaming computers. So really strength across the board as consumers really looking for the value proposition that Costco delivers above and beyond the rest of the competition.
How does the recurring sales and the subscription factor in as we try and assess Costco's relationship to the economy? Do you view it as a consumer staple, a safe play, or do those premium subscriptions leave room for cancellations if things get rough in the economy?
I would view this as a safe play. 93% of their members in the U.S. and Canada renew, so a very steady business for them, and also the real proof in the real it drops down to the bottom line and delivers a lot of the net income for them. They do have a lot of food that is driving traffic. Eggs. You see a lot of TikTok videos of people standing in line for Costco eggs and loading up the pallets. So people are looking for value. And if you go to Whole Foods, you can't even get eggs a lot of the time.
Right. True. Costco doing its job as the reliable source. I mean, revenue growth close to double digits, too. It seems like this can fit pretty well into the Walmart trade, Amazon trade. I mean, it does kind of feel like a lot of our market cap is consolidating around the kind of three big grocers.
Yeah, totally agree. And Costco is growing a little bit faster than Walmart, so I think that's why they're getting a premium multiple there. I think people are looking for a safe haven here. If we do go into a recession, Costco really held up in the 2022 period. When the S&P was down 25%, Costco was basically flat for the year. So as a safe haven, I think Costco is still a good name to look at, even though it trades at a really high PE at this point.
Yeah, fair. You do get what you pay for with a lot of the other grocery stores struggling. Costco, you're paying 54 times forward. Thanks, Chris, for the perspective. Appreciate that.
Sure. Anytime.
Chris Wong, Runnymede Capital Management.
Yep.
Good thoughts there, Tom. I mean, look, this is not a complicated business or trade. So let's get into the options here. What do you got?
Implied volatility levels are lower after the vol crush in Costco. But if you've looked at their performance over the last couple of years, anytime you get a dip like this, it provides opportunities, even though valuation is pretty elevated. So I looked at it that way where, hey, maybe the stock can fall a little bit more, but I can be safe and give myself a cushion to the downside here. I went out to the March 21st monthly cycle, so just 2 weeks to expiration. This is one of those strategies you can do over and over again on a week-by-week or month-by-month basis if you think the stock's going to stay above a specific level. But I looked at a neutral to bullish put vertical, selling the March 960 puts and then buying the 940 puts. $20 wide short neutral to bullish put vertical. I'm going to collect roughly about a $5 credit on that. That's what I can make, $500. I got $1,500 in risk, but that's all the way below 940. That break even to the downside from the current share price, about 2.5%. So you're giving yourself that cushion. Taking that, hey, the stock's selling off here a little bit. I saw some price target hikes. If you think it's going to rebound because the report was pretty good, And is this one of those, those companies in the retail space where you're not going to cancel your membership? They've got over 90% retention rate. They've just raised fees on those memberships for the first time in nearly 7 years. And then also in boom times it does well. In recessions, it might be recession-proof. But if you think this thing's going to rebound or at least consolidate here, this strategy takes advantage of it.
Okay. All right. Sell the put vertical. Bet Costco doesn't go much down further than this. Fair enough. However, you've got a different approach. If you want to go maybe buy the dip in big tech retail like Amazon. Sitting at $200 as the market's trying to firm up. Maybe give me a bullish Amazon trade.
Yeah, 18% off of those all-time highs. It's been on a downturn, and that was just a month ago. Look at that move. So now in correction territory, more than 10% below those all-time highs. So looked at something that gives myself a little bit more duration for maybe a rebound in the stock, and it doesn't have to go back to those all-time highs above 225. So I looked at a bullish call vertical. I went out to the April monthly cycle, so 41 days to expiration on this position, so nearly a month and a half in it. Buying the 200 strike call, that's basically at the money. It's got that higher delta, right? And then against it, because I want to offset some of my costs on this position, sell the 220 strike call. So a bullish $20 wide call vertical. On this one, you're paying roughly about a 7.5 debit. That's going to be your risk, $750. You can make $1,250 if it goes back above 220 at some point into expiration over the next 41 days. That's only about 10%. The stock only needs to rebound 10% to get above 220 at this point. The break even on this one, only about 4% above the current share price, and that break even, 207.50. So if you think this stock's going to rebound above 207.50, this strategy takes advantage of that, and you have duration.
Okay. More straight up vertical.
Yeah.
And bullish. Looking forward to go.
Yeah.
All right. Thanks, Tom. Trade into Amazon, trade into Costco, maybe trade into stocks in general. We've just gotten a nice little bid there. Microsoft and Netflix need to go green, and then you've got the whole Mag 7 suite.